Joining us now is Bob Iaccino, Chief Market Strategist at Path Trading Partners. Hey, Bob, it's always great to have you on Cheddar. Thanks for joining us.
Good morning. Good to see you guys.
Give us your preliminary read on this deal, the idea that Renault could have a better entree into the U.S. market here, but what else would this huge tie-up do for the auto industry?
Well, for FCA, I think it's really about EV, electric vehicles. I think they've been woefully behind in kind of keeping up what's going on. We know what's going on with Porsche. We know what's going on with Volkswagen. We know what's going on with General Motors, with Chevrolet, with the Bolt, Volt, and everything else they might come up with. Renault has been a leader of that. They took off on that very early on. They adapted it. They've worked hard on it. They've got some interesting technologies. And I really think that must be what it's about. When you look at the broad spectrum of vehicles that Renault offers in a smaller market, putting Fiat Chrysler together with them gives them, first of all, you know this already, you've probably said it makes the world's third largest automaker, but in a broad spectrum of products, all the way from heavy vehicles, all the way down to what is close to, when you're my size, two-passenger vehicles with the Fiat and some of the smaller cars. So, but electrically powered vehicles, to me, is what this must be about. And it really puts FCA in the game to be able to invest in that technology and move forward.
It's interesting, Bob, right? We know both of these companies, Renault and FCA, Fiat Chrysler, don't have well, certainly not Renault, don't have a strong presence here in North America, not to the extent that GM and Ford do. Both of those stocks, by the way, GM and Ford down fractionally on the day, even though we see FCA higher, we see Renault higher, we see the broader markets higher too. And so if you're an investor, is this a concern? Would you be dumping shares of General Motors? Would you be dumping shares of Ford because of this news?
I wouldn't, just on the rumor of a merger. There's a lot of regulatory agencies when you have sort of cross-border mergers like this that they have to go through to get this done. Having said that, I personally think electronic vehicles, electrically driven vehicles, are very good for the automakers as a whole. To move away from any sort of technology, it's kind of a Motorola model if you do that. And to get another big player who's pushing into that direction forces this sort of competition. And Chevrolet's not doing bad on this. So GM wouldn't be the one. Ford, not as much. Ford put a lot more investment into hybrids. So I think those fully electronic vehicles or electrically driven vehicles, it's great to have more competition there because it pushes all the automakers forward. That could actually be good for the stocks longer term. But if you're an active investor like myself, probably not in automakers to begin with.
Let's talk about the broader market here, Bob. The Dow up 100 points today, yet the main report is still that there are concerns about the trade war that President Trump said yesterday in Japan, that we're still a ways off from a deal with China. And so why do we see the gains, albeit fractionally, in the markets this morning?
Well, I try really hard not to be political because to me it's just about what these things have to do with positions that myself and clients have. But having said that, two things I'm looking at now with the broader market. Is the Russell outperforming? Because the U.S. consumer, the U.S. economy is still doing well. It's going to be about a 6-month lag for that to hit down to the consumer. Retail is more about logistics of it, but the overall economy in the U.S. is doing well. But it will not continue to do well if the entire globe turns, which it seems like it might, on the back of this trade war. But I think active investors, traders, mutual funds, hedge funds are starting to read the president a little bit better than they did. And it's taken them quite a while, right? 3 years into it, where you see him talking negatively, you kind of look at it as a negotiating ploy. I don't necessarily think that he wants this to drag out. The drag out scenario is if he wins again in 2020 and it's still going on, then I'm really nervous. Myself personally, the downside risk is so much that missing a little bit of the upside, if there's a surprise deal, doesn't bother me. So we're underinvested in equities in general and looking at more things like the Russell and some of the more domestic stocks to kind of make up that exposure.
Bob, I want to go back to this big potential merger in the auto industry and just talk a little bit about Tesla, the only true, actually at this point, American car company.
Right.
What does this mean for Tesla? Does it validate the electric vehicle space for Tesla and help Tesla? I should note shares of Tesla down 1% at this point, or does it represent more competition for Tesla moving forward? Yes, they helped create a lot of interest in the electric vehicle market, but are the larger players with more capital, with more scale, with more manufacturing prowess, are they able to take what Tesla did and go further?
I mean, people salivate over Tesla's cars. I don't see anyone competing with that. You can even talk about the Porsches and some of the higher-end Volkswagens to compete with sort of the cachet of driving a Tesla. That's very difficult. I don't like Tesla's stock, and we've talked about this before, where to me it's just too, until Elon Musk is not running the company and sort of becomes the chief visionary officer or the chief product officer, it's difficult for me to look at the stock as a seriously investable asset. Having said that, and I think I mentioned this week as well, I'm looking at one of the cars as we speak. The cars are so beautiful, they're so well made. You can kind of have reserve judgment on the Model 3 on that, but the previous brands have been so well made, and they're beautiful cars, they're desirable objects, not just an automobile that represents what a lot of people would like to represent in this day and age. So it definitely does, from a pure technical point, validate the industry and bring about more competition. But Tesla kind of can make or break its own, they're their own worst enemy. Tesla makes or breaks Tesla. And that really goes back to Elon Musk.
Bob Iaccino, Chief Market Strategist at Path Trading Partners. Thanks so much for joining us on Cheddar Business today.
Good to be here as always. Thanks, guys.